Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:43 p.m. on December 3rd, 2018. Sorry for the slight audio lapse at the beginning of this recording. There was a slight technical issue that's been fixed. This session will be recorded, uploaded to the Clueless Trading YouTube channel for full viewing by all members or anyone out there with any internet connection to listen to some of our free, absolutely precision predictive analytics, like I like to say, 2 steps ahead of the game on what the conditions of the market are, what the forecast and the probabilities of what might happen over the next coming weeks and the next coming days. Full disclosure, this is purely for financial education, not for any solicitation or advice. On that note, let us begin. Looks like it's a Monday evening. It is, after all, holiday season. We don't have any members here attending tonight, but I'm sure they'll be able to get a chance to review this very, very important videocast at their own time prior to trading tomorrow and for the rest of the week. So try to keep this as short as possible and to the point. From last Monday, when the last video was posted, every single thing and every single probability outcome of what the market might do or not do came true. And every single level that the markets might hit on the upside, specifically, given the technical signals that we were getting from these very precise charts that I produce on a real-time basis daily, happened. In simple English, the markets roared back ferociously, and of course today was the culmination of the China framework, China trade tariff ceasefire, for a better choice of words, and the framework for further talks and negotiations down the road. Saying all that, a couple of things that I mentioned, and I will still mention, that the markets, institutional investors included, retail emotional investors, traders, of course, majority of them just sat around and did nothing. That is simple behavioral game theory. People who are traders who just chase prices, get whipsawed around like monkeys on a hot tin roof, and they never get into setups and positions at tactical lows, and they never tend to benefit from the big moves that occur right after that. Markets are completely, almost 90% of the daily trading in the market these days is dominated by algorithmic high-frequency trading bots, black boxes, and what would take weeks and days to happen now happen in hours and days, and in some cases in minutes. The speed and the ferocity of these moves might, for the untrained eye and the emotional investor or trader, seem absolutely crazy, but they're not. There is a method to the madness. You have to focus on the method, not on the madness. Volatility is omnipresent. It'll always be here. We will get heavy enhanced volatility intraday, intra-week. But the charts that I produce and the roadmaps that I lay across with the technical signals that come across our way that we act on are the only ways that you'll be able to make any money in this type of environment, which will continue forever. Sometimes the volatility is going to be a little bit dampened. Things will be a little bit more easier, but in most cases, things will be hard. And unless you're tracking the charts, understanding some of the messaging that's coming out of it, following my alerts and my comments, my quick analysis on developing news, then there is a very low chance that if you're not following it, there's a very low chance that you are not going to survive these type of algo HFT driven markets that we deal with. Saying all that, tremendous profits were captured, tremendous profits were delivered in multiple stocks, and most importantly, in the major indices. The Qs, the SPYs, the DIA primarily. The diamonds, Dow Jones Industrial Average ETF, the diamonds. The spiders, SPY, SPX, QQQ. And I don't need to sit here and explain every single, mention every single trade. All you have to do is scroll down the real-time Twitter feed, and you with your own eyes can see what was alerted and what was delivered. Absolutely fantastic profits, and I'm sure many of you took advantage of it. I hope you did. And if you didn't, then I highly suggest that going forward, try to be a little bit more tactical rather than emotional. It's not just a slogan, marketing slogan, it's a fact. The less emotional you are, the more tactical you are, the better your chances of capturing significant profits in this environment. So I don't want to keep on going on that, but that's where we are right now. Saying all that, we know what happened. President Trump did a phenomenal job at the G20, and there was a major de-escalation of trade tensions between China and the United States of America, which was a tremendous feat, and President Trump has to be congratulated. The volatility prior to that was intense. We mapped it out in the form of all these tactical charts. And as you very well know, I walk people through it. And when you have random tweets coming out, random comments coming out of the White House from President Trump, it obviously unnerves the market. But as you can clearly see here, repeatedly, that everything follows a pattern, despite the heavy, intense intraday volatility that we go through. Whichever the case, two of the major risks in the market now has dampened and de-escalated, for a better choice of words. One is the China-US war of words. The trade tariff Cold War has started to ease back. There will be many different little kinks along the way, but the biggest threat that we were going to go into a one-way brutal trade war with China that particular risk has been eliminated. And of course, there's going to be little issues along the way. There's no question about it as we move forward. The second was Fed Chairman Powell with his comments last week in New York, his speech, which, as you all know by now, allayed many of the fears that he was just going to go completely hog wild with raising rates, regardless of market conditions, regardless of global growth slowdown, regardless of the housing market starting to ease back. And so that risk has been dampened and, in my opinion, eliminated. Again, that doesn't mean, as he said clearly, as Fed Chairman Powell said clearly, that this is data dependent. If we get very strong numbers out of the U.S., very strong inflationary numbers, wage growth numbers, obviously that is going to increase the odds of faster rate hikes. We do have a rate hike coming in December that's baked into the market, but going into 2019, unless there is a major increase in the rate of inflation in the numbers that come out, the CPI, the PCE, deflator, things like that, then the chances of faster rate hikes in 2019, early 2019, has been somewhat dampened. So those were two major things that were bothering the market. In simple English, they didn't go away, but they eased back, and that's good enough for now. So saying all that, let's get into technicals, and let me just run through a couple of charts. You've seen these things, these charts all the time. You're starting to understand how powerful they are, how much profits they can deliver, only if you act at the right time. So at this point in time, let's start off with looking at the shorter-term charts. The shorter-term charts that traders can use very actively on an intraday or a multi-day basis is your 15-minute chart. You can see that very clearly. Here's your Fibonacci retracements. Here's your megaphone. The upper end of the megaphone is 2877. That is still that scenario is still on the table, somewhere around that 2880 level, the upper end of the megaphone, and that would be roughly another I would say 85, another 500 points or so on the Dow, which is still doable. Now the time frame could be a couple of weeks, which would bring us towards the end of the year. We only have a certain amount of trading days left for the month of December. So that would be a very optimistic scenario that we head towards that 2900 level on the S&P and the 2875 level on the E-minis. We could have a consolidation phase for a couple of days. Market kind of digests, moves back and forth sideways, and then you get that another 500-600 point move that brings us up towards this level. That's not the end of the world, but I'm giving you the short to medium term scenario, what could happen between now and in the next following week or so. Markets, as you know, are volatile. They don't move sideways and just go up and down like 3 or 4 points. Nowadays, they move down 300, 400, 500 points, then they ramp up and go up another 600 points. We're up more than 1,200 points just within the past week. I don't have the exact number on top of my head, but we are. And this is where we were back on the back around when the biggest buying opportunities came around, which most traders and investors do not take advantage of, unfortunately. And the media goes around hog wild about how bad things are, that we're going into a bear market, blah, 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 blah. We've heard that zillions of times. We're not going into a bear market. The U.S. economy is in fine shape. And now with the China tensions, which have de-escalated tremendously, China working to basically accommodate our demands, and President Trump doing a fine job of on a relationship basis with Premier Xi, you can rest assured that many, many, many CEOs out there are having a sigh of relief. And that is what's translating into these rallies that we have seen in the market prior to the China meeting. I mean, the meeting with the Chinese premier in Argentina in Buenos Aires at the G20 meeting. And then, of course, today's fantastic gap up open, almost 500 points, and then ending the day up almost 300 points. Saying all that, markets are not linear. They do not go up in a straight line. They move in a wave-like fashion. They are algorithmic. And that is exactly where through SA trading excels. So this is your short-term chart. Don't want to get into too much. It's right there for anyone to see, anyone to understand. Here's your large consolidation channel. Lower end of the channel is around 27.48. And by now, if you are somewhat of a trader, you should be able to read these charts. If you do not understand anything about these charts, I highly suggest that you review my instructional videos on YouTube under new member intro videos. There are fantastic videos in there that you should look at, chart patterns on how to read my charts, how to trade the levels. It's all there. And if you still don't get it, or if you get it, but you move on to the next stage, then like many, many, many people have done, sign up for the advanced coaching sessions that I take my precious family time away from my family time to instruct and train my traders and members, or anyone else who wants to sign up for it, in trading charts and not just chasing prices and the emotional demons on their head. So feel free to do that. It's under members area on the website. Some people have asked, where's the sign up? It's under members content. You go to members content, click on members area. Right there is the link to sign up for the advanced coaching session, and then move on to the next stage. Simple. The next one is a 1 hour chart. It's a little bit, it cuts out the noise of the 15-minute. You can see what's going on here. We had a very large macro W formation, and that pattern completion happened this morning, close to it, as good as it can get. Didn't quite get to 28.25, but we did get to as high as 28.13, and you can see what's going on. Right when it got to that towards that level, the market pulled back. We initiated a short that delivered around 25 to 30%, or within half an hour. Levels were touched. On the support levels were retested. Markets bounced back a little bit, and this is where we are right now, with futures down about 8 points. The more you not just understand, the more you act on these tactical charts, the better off your P&L will look. It's really that simple. I don't want to make this, it's not rocket science, okay? And what it does, it builds your mental confidence, so you don't do stupid things. You know, you don't buy at the wrong time, and you certainly don't sell at the wrong time. Because in these type of markets, especially when we are looking to make significant profits off these extremely powerful tactical bottoms, we are looking to make more money on the long side than trying to short every single move down. Because if you try to do that based on a price level or even based on these charts, you better be quick. We do a lot of intraday quick shorts using the SPYs and the SPX puts. But if you try to go to bed big time short, you are going to get burned. Now, unless the markets get excessively overbought on all technical levels, throwing out and staying with the short for more than 24 hours or intraday or 24 hours or 48 hours is a suicidal game. You guys know that very well, and by now you should know that. Now, is it possible that this pattern has been fully completed and that we are going to come down and retest the 2600 level again? In my opinion, no. Why? Because the biggest risk in the markets, which creates intense volatility, structured volatility, which was the China trade war situation, and the very tough comments and tweets from President Trump, that risk has been eliminated. Now, can he go back and all of a sudden start a verbal war with the Chinese leaders? It can certainly happen, but I highly doubt it. President Trump is a very sharp New York businessman. I'm a New Yorker. I understand this very well. And I don't think that he is going to go hog wild on the Chinese after the very warm and cordial and diplomatic meeting that happened over the weekend. So I think this risk of a massive 2,000, 1,500 point type of drop for now has been eliminated. But we have the charts, so we know if levels break, things are moving that way, we will consider that probability. But so far, so good. So this is where we are. Do we break out here? Well, we can't tell it. We can't really forecast that by looking at a 1 hour chart. We got to zoom out. We got to zoom out. Here, we have defined patterns. Lots of inverse head and shoulders. This is terrific inverse head and shoulder. Head. I'll change this color. Here's your double bottom head that I was screaming and shouting for people to buy. Similar to here. Here's your left shoulder. Here's your right shoulder. Here's your left shoulder. Here's your right shoulder. Left shoulder. Right shoulder. Everything is geometric. Everything is structured. This is not a random walk through the emotional minefields of your brain. And remember one thing, I hear from traders, man, I just don't get it. I get in there and then the market drops. Well, let me just remind everyone about one thing. We ain't that special. We are the smallest of the minnows and pikers in the ocean, in the river. We are not the whales. We are simple retail traders working hard to make some profits and make a good living. We are not the $1 million players putting in $1 million individual trades and certainly not the $1 billion players. Okay? So the markets don't know us. They know us when we cluster together in masses. They know when the retail investor, emotional retail investor, all cluster and get overexcited or over-depressed. Buying too many puts, all of them at the same time. 100,000, let's say 500,000 retail investors doing that. That's what those block trades show sometimes, right? Retail investors just piling into the same thing. Too excited about something or too depressed about something. The algos attack those clusters in a big way. But aside from that, you ain't that special and I ain't that special, all right? So stop thinking that the markets are watching you. The markets are watching large clusters, the matrix, in the matrix, If you put a sell limit out there, you put a stop loss out there, all that stuff, all those type of things. And in the matrix out there, the algos can see it. And if they see a large cluster, they will attack it. Take you out of that trade and go in their merry way where it should be going. That's the reason why these tactical charts are so critical for your survival as a successful trader. So this is where we are right now. So far, so good. So let's zoom out. We're zooming out now. This is the ultimate. These are the ultimate precision predictive analytical charts that I have shown repeatedly. Some of you have taken full advantage of it. Some of you just don't get it. And it's not that you don't get it. You get it. But those mental demons in your head constantly keep you away from making any type of decent money. And even if you get into a trade, you're out of it within a matter of minutes, if not an hour, because every one of these little red candles, every one of these 15-minute back and forth, scare the living daylights out of you, and you refuse to give yourself the luxury of making some decent profits, which are generally in the range of 100, 200, 300% plus type of things. Nobody can help you with that other than yourself. Nobody. The content that I'm delivering here at Clueless Ape Trading is absolutely top-notch. Absolutely top-notch. This is just some of the best stuff that you will see anywhere. Anywhere. Nobody calls the market. And I will say that with humility, but I will say it. Nobody calls the market in the most difficult times than what I have done for my members. And I will continue to do so. I will continue to keep on doing my job. You try to do a better job of managing your own trades and making some money. Saying all that, it's never easy. If it was that easy, everybody would be doing it. Okay, let's move on. So here we are. We hit this level here. Immediate sell-off came. Profit taking, obviously. We were up 200 on Friday after being down 200. We were up 600 the day before. Then we were up for 500 in the morning. So add it up. 600, 200, 800, 500 almost up in the morning. Up 1,300 points on the Dow Jones Industrial Average in 72 hours. What do you expect? The market is just going to just keep on flying? No, they're going to reset. That's the reset that happened today. And even then we were up almost 300 by the end of the day. So saying all that, this is what we're watching on the daily. Is this severe overbought condition on the daily translate into large candle drops of hundreds of points on the Dow and a very fast multi-day reset, or will it pull back towards? And by the way, just so you know, before I go any further, I have the answer for that, and I'll show that answer to you on the Thinkorswim E-minis and the SPY charts in a couple of minutes. Take it to the bank, ladies and gentlemen. Okay, take it to the bank. I have the answer for you. Just the way I have given answers in the most difficult circumstances in the market. And they have I would say 8 out of 10 times, 80% of the time, they have been dead right. That's a very high ratio. So, saying all that, will it be crash and burn? Or will it be a quick pullback, retest certain levels, 200 points, 250 points or so, then it move up again to attack the 28.25 level on the E-mini futures on the daily? That's a major resistance. That's why you have 3 big red arrows, and then we break out and we go towards that 28.80 level or so that I showed you on the megaphone, which would be pretty substantial because this is exactly where the market completely collapsed. If you remember, because that's the time that the chat rooms went completely blank, which is not a problem, by the way. The lesser the amount of banter in the chat room, it allows me to spend more time producing quality content that I always do on the real-time Twitter feed. So I don't take the looking at the chat room as a bad thing that very few people come and mingle around. There's about 2 or 4 souls who are active traders, good traders. I'm not going to mention names and give them a big boost up. You know who I'm talking about, who handle around there and still active in the chat room. But most other people who are still out there, but they have disappeared off civil discourse in the chat room, which is a good sign. It's a good sign because it shows a high level of anxiety, a high level of fear, a high level of despair and apathy, which are normally the ingredients, as I've said always, and I've been right on that 100% of the time, for a sustained reflex bounce or a tradable bottom. Tradable bottom. So from a behavioral finance standpoint, those are some of the most accurate indicators. So that's all good. That's all good. So, saying all that, do visit us once in a while in the website chat room. All right. So, are we going to completely cash and burn? Crash and burn, not cash and burn. From here and then all the way down here, sure can happen. But I explained earlier on why that probability is low probability, given some of the risks that have diminished tremendously, thanks to President Trump and thanks to Fed Chairman Powell. But can we come back and retest these levels here? Even come back and retest the Fibonacci 50 level that I kept on screaming about, and it went above that in a big way last week. In a big way last week on this big spike was the Chairman Powell spike. Sure we can. Sure we can. But we shall see. So far, this is complete pattern completion. Regardless of volatility we're going to encounter, this is the first pattern completion, 28.25, and the big one is 28.80. High probability that happens in the month of November. I'm sorry, the month of December. I'm backtracking time here. Told you I was clueless about time. So this is full pattern completion. It will, in my opinion, high probability happen. Along the way, there's going to be heavy volatility, retest the 50, maybe a possible intraday slippage. All that is there. So, hi MB. I'm continuing with my webinar. So thanks for stopping by. So just you can catch up on the first part when you listen to the recording. So, saying all that, let me zoom in. This, by the way, is 2018. This is where we started. One heck of a volatile year. In fact, the most volatile year that we have seen in a long time. The euphoric rally, beginning of the year. Chat rooms are just full capacity seating. Right? There's no room there. Everyone's a little too excited. Bang! Everyone disappears. Comes back. The big uptrend channel broke below that. That happened back on. This was the breakdown point. Don't forget, very important to remember these reference points. That's exactly what the markets will do. They'll come back and test those levels. That was the 9th of October. 10th of October. 10-10. Remember, 10-10, the day the world ended. And again, I don't want to sound like a broken record, but they're going to retest that level. It's going to happen. And in between, it's going to take a little scenic detour, little volatility resets, possible pullback here to create on the stochastics. And we'll zoom in now. There we go. Keep your eyes open, your ears open, and your brain somewhat open to understanding what I'm explaining. Not rocket science. This is full pattern completion on that white megaphone. This is intermediate pattern completion. We almost got there today. That was good enough for a intermediate pattern completion 1. This is number 1. Number 2, I should say. And this is full pattern completion which is pattern symmetry completion. Number one. So even if you knew nothing about the markets, you could just trade the goddamn market and make a ton of money overall, net. Just by trading charts. You have to know anything about the market. So at this point, this is where we are. This pulls back, let's say to the 50 level. The full stochastics, you can rest assured we lose about 200 to 300 points. Pull back here, retest this, possibly retest the 50, the 2700 level, which we can very easily. The SPX is at 2790. If it goes to 2700, that means roughly about 500 to 600 points. We can get that within hours. We've gone through a whole bunch of them in so many days, right? Don't forget that. That comes down. Generally speaking, if it comes back and retests the 50 level, it creates on the full stochastics a lovely inverse head and shoulder. Bingo! Another excellent buying opportunity. Because where we are right now is not an excellent buying opportunity, ladies and gentlemen. Okay? It is an excellent selling opportunity like we did when the markets opened up this morning. We have select longs on special situations. But you didn't see me go out there and say, buy Google, buy Tesla, buy Amazon, buy Apple, buy Facebook. No, I said sell those babies. Take full or partial profits. Simple English. Right at the top. And that's what smart tactical traders did. Congratulations. So, if it comes down here, pull back, and this remains intact. What would not be intact is if we lose the 2680 level, in which case we're going to come back and retest 2600 again, which I repeat again, is a low probability event in the month of December, unless things go completely nuts with China again. And Powell goes completely nuts and says, oh, I'm sorry, I didn't mean to say that I'm data dependent. I meant to say I'm going to raise rates forever. Yeah, markets at that point will go to 2600, 2500. But as Americans, we are decent people. And Fed Chairman Powell is a very decent individual. Don't expect him to say that. Let's move on. SPYs. Beautiful chart. Beautiful chart. Again, pattern completion on the SPYs is 287. That is the upper end of the megaphone. You ever wonder how megaphones work? I don't know, but they work. In fact, there's a technical analysis on megaphones. Google it, go to Investopedia, type in megaphone patterns. It's a weird thing. It works. Now you have to draw it a certain way, which I do. It works. You can just randomly go out there and draw a megaphone. This was drawn because this is where the markets were before they broke down. I simply touched the two major points, downtrend line and this downtrend line, which is 1, 2, 3, and I just drew that. That's it, and I left it there. And once you enter into the megaphone, oh boy, this is what happens. So, first pattern completion. Remember, this is full pattern completion. First one completed today. Today. Right where we sold at the top. Next one. Possible pullback. We'll see how these levels are handled. That's why I draw these lines. Do you know where they can go? So far, looking good. Full stochastics. If it starts to move sideways like it did here, like it did here back in July, like it did here back in June, then you can expect a sideways range trading, which is basically this type of pattern, which is a consolidation bull channel, like that, before it breaks out again. Is that possible for the next couple of days? It's not a couple of weeks I'm talking a couple of days. Absolutely yes. What would completely demolish this pattern, I repeat again, is if we go below this major downtrend line breakout of 273.44. You don't need to look at anything else. All you need to do is match what you're looking at with what I'm showing you in the charts. Everything I need to know about the markets is in these tactical charts. I could turn off Bloomberg, I could turn off Fox Financial Network, I can turn off CNBC, I can turn off everything and just trade my charts. All right. But then I'd be really bored. I'd like to know what's going on out there. So, saying all that, nothing new here. So far, so good. Kopok is turning. This is overbought, but can certainly move sideways, or even if it pulls back a little bit. It's okay. It's okay. I want it to pull back a little bit so I can buy it a little bit cheaper after we sold stuff today. And we put out a couple of longs going out to December 21st and December 14th. But this is powerful. Generally speaking, the chances are that after we do a quick reset, and we could be doing a quick reset now, futures at down 8.5, right? Scare the lemmings again, who never buy these, never, ever, ever, ever buy these. And then they get too excited, maybe buy a little bit here, or they never buy it. They'll never buy it. The lemmings and the retail emotional traders will never buy it when they pull back a little bit. I can guarantee you that. Why? Because as a professional trader who runs a service and as somebody who has dealt with clients and their emotional diatribes and their thoughts and processes for many, many years on Wall Street, I know how people think and how they act. It never changes. Some people change, but most don't. So if you want to look at an extreme head and shoulder, then you got the two heads here, and you got a left shoulder here at 269.68, and this is possible. It would be a fantastic buying opportunity again. So I implore you all to buy the crap out of the market if we hit the 269.68 level, which is a couple of 100 points down from here. All right, nothing new to report here. Let's move on. The next one is your picture of the S&P 500 since 2018. Right there, 2018 started, so I'm going to zoom in. This is with the original chart, which showed the cup and handle breakouts way back, right? Then we had this, which was end of the world, right? No, it wasn't. We did quite well trading these, trading the pullback as well as the reflex bounces. But for the rest of the world, it was the end of the world. Pattern completion. This is actual S&P we're talking about. So no conversion from E-minis and stuff like that. 2880. The large macro inverse head and shoulder. Confirm bottoms. This little hammer that you're looking at was all of you completely disappearing from the scene. Was the day after Thanksgiving on a lovely Friday with the sole buyers were people out there who never come in the chat room, some of them, and I was a sole buyer of selective indices, SPYs, Qs, Apple, right there, the day after Thanksgiving. And this is what happened the following week, Monday, Tuesday, Wednesday, Thursday, Friday, Monday. So from this Friday, which was last Friday, not last Friday, the Friday prior to that, Monday, Tuesday, Wednesday, Thursday, Friday, the Trump meeting, this is this past Friday, and this is where we are. Isn't that lovely? It's actually, it's lovely because anybody who played these charts and had a little bit of money rolling or a lot of money rolling, they know exactly that it was lovely. The rest of the other people, I pray for them. So, triple false stochastic bottoms. Big positive divergence. It bottomed, market was here at 2710. It created further bottoms, a double bottom, same level. Markets were at 2600, 600 points lower. Much lower prices, same level on the stows. What's that? That's called a positive divergence. And this is what happened after that. Then this happened. So this was that Friday, to repeat. Afternoon. Not a single soul in sight. Not just in our chat rooms, like anywhere out there. And it was the best time to ever buy things on the cheap. Now, why was this important? Because look at what happened here. It created a triple bottom. Even though it was an inverted hammer and the market closed down at the lows at the end of the day, the stows were telling you, buy me, I'm on sale. The stochastics were telling you, buy me, I'm on sale. Could have put a little bit in there. Hopefully next time, you guys do it. But hey, I ain't your mommy, right? So there we go. This is beautiful. Today, we opened up all the way here past 28 or around 2800. Where did we go on the S&P? We went to 2800. 2800 we went to on the S&P. 2800. 2800.18. Lots of eights, guys. Then we pulled back, and then we ended the day with a hammer reversal. That's a hammer reversal. It's red. That means there were more sellers than buyers. But it was a hammer reversal. Does that mean we're going to gap open tomorrow? Nope. Can we gap open tomorrow to 28.17, which is basically the first pattern completion? Absolutely. Absolutely. Can we get there by tomorrow after the market opens lower? Absolutely, yes, we can. We are getting overbought, and we will reset. Once it hits 28.17, you can rest assured there will be sell programs, because these were some major supply points where the markets got hit. The programs came in to sell. Sell, 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 right? Like Kramer says. Well, the algos do sell, 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 sell. I know I sound stupid, but I have to make that little, little sound effect. Right there. Now, can it bust a move from there? Sure it can. But generally speaking, when you hit these major supply zones or resistance, you generally tend to get a minor pullback. So you could get one, this happens all the time. Watch this. So this is this. This is what happened. Right? This is the top end. This is final pattern completion around 28.75. Intermediate term. So once you get to this, neckline, this was the first neckline. This is the second neckline. So let's say this is this neckline here. Then you generally tend to pull back a little bit before you attempt to break higher. So you can look at it as a cup and handle too. A cup, a handle, a breakout. So let me draw it here. A cup, there. All right. So let's see. But so far so good. This is a gaping. The lines are the crossover up, or the gaping mouth. Look at that. It still looks pretty ferocious. Looks like it wants to get overbought at around 103 on the stochastic RSI. On the stochastics, and we're at 93. I don't really look at the numbers. I look at the shape. So still room to move higher, but getting towards that level where the big sell programs hit. Let's move on. The VIX. To call it the Vixen. Somebody said, hey, watch out. Don't call it the Vixen. It sounds a little too sexist. I said, I do apologize, because I'm certainly not sexist. So I call it Mr. Vixen. How about that? Okay, I call it Mr. Vixen. So that's kind of balanced out. So this is Mr. Vixen here. Look at the weekly. I just want to cover a couple of things that I am looking at. The weekly stochastics are diving down. Weekly stochastics get oversold down here. This is weekly, not daily. So that means the VIX has room to fall further. I'm not saying it's going to 11. But I am saying that it can very well go to lower levels from where we closed at today. We closed at 16. It can go to 15. It can go to 14. The stows are telling you that it wants to go lower. Can it suddenly move up like that? Sure can. That's the VIX. It's a derivative product. Any type of negative situation out there, whether it be political, whether it be company related, a company issuing an earnings warning, a big one especially, the VIX can easily move up from this significant support level, which is around 17, and just bounce up. If the slow stows keep on continuing downwards, then you can rest assured that's just a temporary bounce before it resumes its trend down. This is the weekly stows. Let's move on. The Dow Jones Industrial Average. I love this chart. I mean, I think I drew this chart. I will give myself a pat on the back like a complete robot. Every single pattern is so defined. Every single level I said the Dow would go to went there. Come on, guys. Gotta wake up and smell the coffee. Seriously. One thing I know, and I'm not just talking about myself, when you get too many good things delivered to you, you just don't realize how good it is. The content that's being delivered across the board, not just the Dow Jones, the SPYs, and that individual stocks, is absolutely premium, hardcore money-making content. You have it so good, you just don't realize what you have, and you don't act on it. It's a tragedy. It is. Just sit there and listen to it. You look at it like, oh, boy, I should have done it. Oh, boy, I could have done that. Well, act on it next time. Buy one call. I mean, what's the big deal? Buy one call of an earnings. Say, no, I don't do ER trades. Okay, great. All right. I mean, don't be dogmatic. Don't be dogmatic. I know we all love dogs. I certainly love dogs. We have enough dogs in the house. But don't be stupid or stupidomatic, okay, instead of dogmatic. Try some new things. That's how you learn. I learn every day by trading a new stock or looking at doing a certain thing a little bit differently on a particular stock. Learning how to momentum trade really fast on fast-moving stocks. How to play reversal trades. They weren't taught to me. Like I'm teaching you guys, sharing my experiences. Come on, guys. So here's your Dow Jones Industrial Average. Here's the 50 Fib. Fibonacci 50% level. Reflex bounce. Always happens. Always. I'm not going to even say almost. Always happens. One with the other. Guess what the Dow closed at on Friday? This is not rocket science, guys. It closed at 25,537.68. That was Friday's closing. The late day move, the three-soldier move. You think somebody didn't know what was going on or what the outcome was going to be on the Saturday meeting with Premier G? There's people out there who always know. So watch the charts. It closed exactly at the 50 Fib. Guys, come on. Like I said, you have it so good, you don't even know it. What if I was wrong 90% of the time instead of being right 80% of the time or more? Well, I'll get some sort of cocky answer saying, well, we wouldn't be here then. Well, you know what? Not true. Because then when I would give you some right, powerful trades, which would be right, let's say 20% of my trades were just right, 80% wrong, you would love it. You'd be like, oh my God, he gave us trades which way 200%. This is great. We love clue-to-say trading. But here you're getting the opposite. You're getting 80+% of trades which are happening within the framework explained and delivering huge profits. And then 10 to 20% of the trades which are taking a more, what I call scenic route, volatility, and then going to where it should be going. And then one or two just not working. Which are hard to define because most of the ones that I trade tend to work literally, no kidding, I'm going to say it, 100% of the time, but sometimes they take a little bit longer. So that's what's happening here, guys. You're getting too much of a good thing. I mean that. Too much correct, predictive, analytical, perfect, direct hits. You're getting spoiled because you're not doing it. So maybe I should just start giving you guys a lot of garbage, wrong trades, so that when I give you the really good ones, you guys are going to jump on it like crazy. I'm half kidding. No, I am kidding, because I'd never do that. Saying all that, 50% fib. Hit that on Friday. This is where we are right now. This is just at 61 fib. That's exactly where that's where we went above that, and this is where we pulled back to. This is a very powerful chart. This is the Dow Jones Industrial Average. Full pattern completion is around 27,000 Dow. 678.6 fib retracement is 26,6035. Looks very likely that's where we land up. Somebody says, "Oh, what do you think the market's going?" And you want to sound like a friggin' genius? Just say, "Oh, I think we're going to run 26,353, maybe around. Yeah, maybe it goes to 26,500." Which is pretty much where we broke down from. And guess what? That's where the market will go, or there's a very high probability of going. Okay? MB came out with saying, "No, I like to be spoiled." Yes, I know you do. And MB is one of our good traders. She actually participates in different things, including her own trades. So my hat's off to her, for sure. So, yeah, I'll spoil you, MB. Just kidding. All right, so that's where we are. Bear with me one sec. Now, one of the other reasons I like this chart, because the Dow is a lot more cleaner, if you can see the pattern, right? So this would be, this breakdown level is a significant level. This, it's not just retail traders and stuff. This is when institutions got completely flummoxed. Isn't there a word called flummoxed? We'll look that up. Or completely obliterated. Hedge funds just blew up. Right? This is where everyone went super duper bearish. Just, that's it. The world is over. It's just over. It's never going to come back. Okay. That's good. You know I fight the dogmatic shorts all the time when it comes to the chat room. I like to put my comments through. I don't fight. I'm not a fighter. I'm a lover. I will fight you on tactical charts. I will not fight you physically. Why? Because it's not worth it. I'll get somebody else to fight you physically, and they'll just beat the crap out of you, okay? That's what New Yorkers do. All right, all kidding aside, let's do this. So as I fight them, this is, I know when people get completely like, okay, that's it. We're going to 2,500 S&P, 2,400. And you hear some people saying that, okay, fine. So I fight them with some intelligent comments and through my charts. And guess what? I win. Now, do I sound like Donald? I win. I win a lot. So when you win a lot, you can't just shy away and say, "Oh, I won, so I'm a really weak guy." No, I'm not. Because my charts are very strong. So look at this. This is head and shoulder. This is an inverse head and shoulder. A large one, right? See how patterns, happen in between? This is an inverse head and shoulder. A small one, which went through the neckline, became a big one. So now we have the left shoulder. Possibly a little pullback would be nice. You could drop 400 points, 500 points. Still have the left shoulder, right shoulder intact, and move from there. Can it happen? Sure can happen. What if the government shuts down for 2 days? President Trump is very adamant about getting the border funding, the amount that he wants. Government shut down for 2 days. Market will drop 600 points. What if we get a tweet saying, "We had a fantastic meeting with the Chinese Premier Xi. He's a very cordial person. Great relationship." That Donald does have a great relationship with him because he's done a lot of business with Chinese. Even still does. For his residential stuff. Chinese billionaires own significant amounts of Trump towers and other buildings that he's building worldwide. So, but what if he says, "But he's disappointing me a little bit." Boom, market will drop 700 points. Do I think he's going to do that this quickly? No. So, saying all that, it's very defined, this chart. And DIAs are excellent options to play. So people who haven't done that, highly suggest that you do. You don't have to pay an arm and a leg to buy them. They generally run, the ones that we recommended around 2 and change, they're at $9 right now. And those were the ones which were the December 7th, December 14th, type of 250s. Early December, weekly 250 calls, DIA, diamonds. They went from roughly 2, sometimes less than 2, when I was recommending them. Here, just within the past week. So they went from less than 2 to hitting. These are the 7s for this week's, which I recommended last week many times. Went to $10.14 when the market opened. That is 5 times. That's a 5-bagger. A 5-bagger. You don't get that in real estate in a couple of days. You get that in real estate in years. A 5-bagger. Okay? Unless you're flipping properties and somebody gives you 5 times more for what what you're flipping. You don't get that either. Trust me, I know. So, you made 400% ROI, right? Remember, 5-bagger means you made 400% profits. You went up 5 times. This is just since last week. Sorry, 23rd of November. That was last week? Yeah. It was, well, 23rd was actually the famous Friday after Thanksgiving when nobody wanted to speak to me, and I was very sad. Just kidding. All right, so that's how it happens. So it's a beautiful chart. Not just forget the charts. It's an excellent options trade of the DIAs. Play them. If everything goes the way the market wants it to, we're going to 27,200. All right? In the month of December. Okay? How about that? In the month of December, we will go to around 27,000, which is roughly 1,200 points higher from where we are. Based on this chart. Is it a high probability? No. Is it a medium probability move? Yes. Do we get to at least 26,369? Yes. Yes. We get there. Doesn't matter what the news is. They will take it there. Is this the first? Is this a resistance level where we broke down from on the 12th of November? Yes. Is that where we went to this morning? Yes. What's the next supply zone where we broke down from, which was on the 9th of November? 26,164. Right here. Look. 26,164. Are we going to go there? Yes. Along the way, are we getting some volatility moves which could do this? Retest the 50 Fibonacci retracement? Yes. You like the yeses, right? Can we slip and do this massive pullback? Drop 1,000 points? Not a complete yes. Can it happen? Yes. If I see it happening, I'll tell you guys right away like I always do. Will it be a phenomenal buying opportunity to go back towards 25,000? Yes. Any more yeses you'd like to hear? Nope. I don't think so. All right, let's move on. Trying to keep you guys all awake. So here's your E-minis right now. What we're seeing is we hit, this is what we're looking at, right? This is the full pattern completion at 2,900 almost. Major resistance at 28.23. This line is your 200-day moving average right there. See, right there is the 200-day moving average. So I actually put a line here so people can actually, don't even have to look what the number is. They just have to read this. I'm sure many of you read numbers. I hope you do. 27.64. Did we go well past the 200-day moving average? I was screaming and shouting and begging people to say it will go to 27. It will at least retest the 200-day moving average. Excuse me. Answer is yes, it did. And it blew through that today and created a red doji. Is a red doji necessarily really bad? Nope. Does it mean that there was a lot of profit taking and a little bit of indecision? What might happen? Yes. That's what a doji is. Refresh your definitions on Investopedia. Did it hit the 150-day moving average, which is very critical? Yes. Did it slip below that as we speak with futures down 8? Yes. All right. Can we come back and retest this 200-day moving average again, 2764, which is roughly 20 points lower, 20 handles lower from where we are right now, which is roughly 120 points on the Dow within the next 24 hour? The answer is yes. You guys are liking this, I know. Yes, we can do that. We can fall 150 points on the Dow real fast, even at the open tomorrow. What's the big deal? A retest is almost mandatory. So let's zoom in. 200-day moving average. Sharply rising 5 SMA. Very nice. Where is that coming to? This is not rocket science. This is pure tactical bliss. Predictive analytics. Where is the 200-day moving average? Right where the sharply moving lovely yellow line, which is the 5-day SMA. Why 5? Because there are 5 trading days in a week. Bingo. I love the 5 SMA. It's moving up like that. That means the market's an uptrend. Short term. 50-day moving average right here, still pointing down. Now, something else is happening here, which didn't happen here. Can any of you two fine individuals who are keeping me companies on this lovely evening tell me what it is? The difference between what happened here, this massive bounce, which we capitalized on, and it hit that 28.25 level. It is doing exactly the same this time. What is the difference when you look at, I don't want to give away the answer. I mean, I spotted right away. Then that's what I'd like you guys to get to, where you can spot it right away. What is the difference this time? Please, MB, SARM, do you want to chime in? What is the difference this time? That's how you read the tea leaves, guys. That's when you know it ain't the same as last time. At least from a probability standpoint, it ain't the same as last time. What is the difference?
Rising versus falling 50.
Right, yes. So you gave the answer. Basically, the moving averages. What above the moving averages? No, that's not the answer. No. Sam gave the right answer. The moving averages, the trajectory of the moving averages. Look, 20, 34, 50. This is what was going on while this happened. This time, 50 is still pointing down. This is money in pocket. Even the so-called Goldman Sachs quants, the guys reading this thing, maybe they're saying the same thing. I doubt it. But look at the difference. Look what this was doing. The 20, the 34. The 5 was still pointing up because that's a short-term move, right? Short-term markets move. The 5 is going to get dragged higher. But here, there's a fundamental difference. If you don't mind just looking carefully, the 20-day moving average has now crossed over the slightly flattening orange line. That's the 34-day moving average. Here, the 20-day moving average, as the market was moving higher, was plunging. The 34-day moving average, it was plunging. See the difference? Here, they were doing this. They were moving down at a 45-degree angle. Here, they're moving up at a 30-degree angle. If you don't mind focusing here, look at the blue line and look at the orange line. It's not plunging like it was doing here. Now, what does that mean? It simply means that there seems to be a CIT, change in trend, or trend change, TC, possible in progress for obvious reason. Donald just had a lovely, did you see? Did anyone read it's on the article that I put through, because I was trying to keep you guys abreast when I was putting on Saturday, having my lovely glass of vino, and I was sitting there, I'm like, yes, it did it. They're doing it. They're talking it. And I was monitoring the South China Morning Post, SCMP. You guys can do that too. And there were good vibes coming out. There was applause after the thing, even before they made any comments. I'm like, that's good, man. That's really good. And you see the menu that, one second. Did you guys read the article? Did you see the friggin' menu they were having? The type of wine they were having, and this Argentinian hardcore, like Argentina is the world's best steaks anyway. The gauchos out out there in the Argentinian plains, the Argentinian bulls, the meat lovers. Even when the country was completely broke, they just ate like you would eat at the fanciest steak restaurants in New York City. So what was I talking about that? I forgot for a minute. So the difference is, of course, yeah. No, I said over such a sumptuous meal, they had a extremely powerful, constructive meeting of minds, which was already done by the cabinet members and stuff. But at least in the surface, Trump was happy to be dining with President Xi. That's a big thing, guys. That's a big thing. You should know that by now. We're grown adults. When you don't kill your neighbor or your best business partner, and you basically, badmouth them as much as you want, put in the squeeze, like we say in New York. But then you sit down for a nice dinner with great wine and great steaks, and Donald doesn't drink, right? So, okay. That's a good thing. So this is important. The 20 crossing over to 34, this is obviously the same. Anytime there's a big move, the 5 days going to move higher. One thing I also noticed is that we are starting to see the small curvature of the 150-day moving average, which brings me to my other point. Stochastics are totally fine. Remember, today was all selling. Look at that. Today was all selling, which is fine. That's all the reset. Profit taking. Didn't we take profits? The big boys took profits too. This is fine. So I'm not going to look at the internals are fine. This is what I'm noticing, and this is how your keen eye should notice, is the fact that this is happening. The other thing that's happening is, which I noticed, the 200-day, through all this heavy, I can't even say it anymore, heavy volatility. I mean, that's hardcore. The world's ending. We got, a couple of members just dropping out. Like I see, cancel membership. Like, oh my God, here falls another one. And hold on, please. Sorry. Something stuck on my teeth. I couldn't tell what it is. Maybe it's that Argentinian steak I didn't have. So anyway, so just like fear, apathy, desolate chat rooms, and it's just scary out there. The world's ending. Throughout all that, complete despair. Guys, big shot guys coming up and saying we're going to go into a recession first quarter next year. Oh, really? Okay. Not Colin Powell. Fed Chairman Jerome Powell is unpaid periodic. Trump beating up on him on Twitter. Like everything, the worst things. Apple, they can't sell a phone. Everyone's buying Sam Dunks. Yeah, right. It's just like terrible stuff going on everywhere. Interest rates are going to go to the moon. We're going to be paying 30% for our mortgages. Throughout every single horrible thing that you could ever think of, what did the 200-day moving average do since the first major crash in the market back on October? Back on October, when this happened, all of a sudden the world said, oh my God, emerging market crises, Turkey, the priest is going to be shot, he'll never be released. I told you he was going to be released. He was released. Emerging markets rallied like nobody's business. Turkey became back into the fold as a NATO ally. Erdogan and Trump made peace. So throughout all the stuff, and I just try to remember all the horrible things. Brexit, the new Brexit, and the Brexit is a joke. Okay, it's not going to go through. Just so you know that. Okay, sorry. They got to do something about it. So anyway, I'm not going to get into that tonight. So bottom line is that what did the moving average do? The 150 and the 200. They kept on humming along. Look at these lines. They just kept on going. They're like, okay, guys, you guys want to party like monkeys on crack, like, eating bath salt and going out there eating somebody else's ear. Horrible thing, by the way. That's what bath salt does, I guess, right? In Florida, all those horrible stories we used to hear. Thank God they that stopped. And like all kinds of horrible things happening, people just going nuts, zombies coming out. It's the day of, what's that show? Where they went around the killing people because it was that certain day. Does anyone remember that show? The Purge, the Purge. Everything's being purged. We're all, we're just horrible people. We're all racists, like, all kinds of stuff, like horrible stuff. The 150, 200-day moving average just kept on going sideways. Like, hello, okay, see you later. You guys can just go nuts. We don't care. So what does that tell you? That tells you that overall the market's fine. This is the daily chart of the actual market, and the 100 and the 150 and the 200-day moving average is still humming along sideways. Why didn't it do this? Think about it for a minute. This has been going on since October. Yes, somebody can say, "Oh, it's only been about 2 months." Okay, that's 2 months. So in 2 months, why didn't the moving averages completely collapse, or at least take a nice detour down? Why are they just humming along horizontally? Look, I'm not a rocket scientist. All right, I just look at things simple. Just don't overcomplicate things. Don't be sitting in an analysis paralysis garbage that most of you sit on. All right? First of all, it's a defined pattern. It's as defined as you can ever get. Yeah, we most probably will pull back a bit. We need to pull back a bit. Okay? And then we'll finally complete this pattern. And throughout all that, the moving averages just keep on moving sideways. It's telling you the market's okay. The market's okay. All right? So when you go to bed, just keep on murmuring to yourself, the market's okay. I need to be a little bit more involved. I need to take a little bit more risk. I need to make a little bit more money. And guess what? You will. So, I'm not going to go any further because I mentioned a whole bunch of stuff. I don't want to keep anyone any longer. It's 9:55. I will most probably do another session tomorrow because I want to, get people going a little bit. All right? So, have a great evening. Mentioned a whole bunch of stuff. There's a lot of stocks out there. Still way off their 52-week highs. And one last thing I will show you. This is the weekly. By the way, today's volume was this on the E-minis. Look at that for a minute. Oh, well, the week started, so I can't really compare it. Okay, sorry. This is the other thing that's exciting. If you believe that you're going to wake up tomorrow alive, which is a horrible thing to say. Of course you will. But I hope I will. So bottom line is that look at these. This is the weekly. Every time these things happen, big things happen. Big things happen off these bottoms. The weekly RSI or stochastics, full stochastics, went to 20. Okay? Do I need to put some sound effects? 20. That was back on December 29th. Went to 20. Don't even bother looking at the charts. Then we make a double bottom here on November 19th. And the stochastics made a higher low of 32. This, ladies and gentlemen, happened back in the March-April period. Markets went a little bit lower. Markets went a lot lower. Or came down to the same level. The stochastics, weekly stochastics, kept on creeping higher. Once they cross over, see you later. You get multi-week rallies. But in between, we know the levels. It's going to get hit, what the pattern symmetry is. But I just want to show you this before you went to bed, because I know you guys love charts so much that You just dream tactical dreams, don't you guys? Exactly. I know you guys do. So dream this, all right? Because this crosses over. You get a weekly move that lasts a couple of weeks. And it could very well be happening now as we speak, because we just have a couple of weeks to go into the end of the year. Have a great evening. God bless you all. And always remember, if you're not in it, you can't win it. You got to be in it to win it. God bless you all. Good night.